Joining us now is Paul Ramscar. He's Director of Wealth Management at Financial Partners. So you're ruling this out? Confident?
Yes, I'm quite confident. I think last year, about this kind of time, we said that the recession was drawing to an end. And I think that's proving to be true now. And if we were to go into a double dip scenario, that would need to happen quite quickly over the course of the next few months, because technically the double dip scenario has to happen within 12 months of the last recession ending.
Otherwise it's a fresh recession, is it?
Correct.
Okay.
That's right. So I think it's looking very unlikely that we're going to go into this double dip scenario.
Okay, so that's semantics though, isn't it? So if we have it in, let's say, 3 months' time from now, that wouldn't be a double dip, that would be another recession.
That would be a fresh recession.
Okay,
correct.
And is there any danger of that?
I think it's proving it's unlikely. Growth is slowing down at the moment. US growth will be low and slow. China growth is slowing down. But it's like we had a very sick patient in the hospital for 2 years. The patient was pumped full of drugs for 2 years. Now those drugs are wearing off. Now the patient is slowly starting to recover. So I think, it's looking unlikely that we're going to go into another fresh recession.
All right, well, tell us about the corporate earnings then as a result. We saw Samsung Electronics yesterday blow away numbers, but stock fell back most of the day. And this was people saying that they're looking ahead to the second half and the headwinds there, that the global economy may be slowing down. They may actually feel it on the bottom line as well. What was your take?
Yes. I was a little bit surprised that it fell back as it did. But I think we are starting to get growth in the US. And actually, I was reading some research this morning which actually says that the US consumer is actually getting a lot more sensible. And credit card delinquencies are now at an 8-year low.
Or are banks lending money more frugally as well, perhaps?
Correct, correct. So I think, things are looking a lot better. And the world is becoming a better place now. I think that in the next 12 months, we'll be having a very different conversation.
Well, let's hope so. Earnings are going to be key here. We're heading into the earnings season in the US.
Yes.
We've got those numbers. We've seen last time the revenue side improving. Previous times, it's always been about the bottom line and the cost side. There's not much fat to cut anymore, is there? So what are we looking at?
I'm not expecting stellar earnings, but I'm expecting some good earnings. I'm not expecting earnings to, hit the ball out of the park, but I am expecting good earnings, especially in the tech sector. But I'm also expecting some major sell-offs on gold, because I think gold is finding it very hard to get above that 1250 level. And I think investors could be in for a surprise regards to the gold trade. Well,
of course, if things do improve, especially with the US economy, people will perhaps not want to hold gold, will they? And they'll be investing in stocks. And with the S&P now trading at, 12.5 times earnings, some are saying this is a screaming buy.
Yes, of course. Well, we've been buying US equities now for the last 6-7 months. We've also been buying on the dips. We've not been panic selling. We've been loading up on China. We still like the China growth story. And we think things are going to bode well for China. As I mentioned just earlier, things are slowing down a little bit, but I'm not overly concerned with the slowing down of the growth in China. I still believe in the China growth story being driven by domestic consumption.
Do you like the Credit Suisse idea that you buy into the banks here, because they will actually, the ones listed in Hong Kong, because any yuan appreciation will, of course, be factored in there? Yeah,
absolutely. And as we go through this recovery, the financials and the banks and the insurance companies stand to benefit. And I'm very encouraged that the investment banks, JP Morgan, Morgan Stanley, Barclays Capital, they're starting to hire. I don't think they would be hiring again if they thought we were going to go into a double dip recession or a fresh recession, because they'd have to lay off those new hires.
Paul, I want to get your view. I was talking to an analyst the other day and he was saying that the US economy, I just want to look at that, it's like, it's almost like these tyres which are spinning in mud at the moment, just can't get any traction, no jobs being created. When do we actually see that jobs growth come in? Because that's going to be key in terms of consumer confidence, and of course that feeds into the wider economy.
Yes, I think you had a key word there, and it's confidence. And I think the small businesses, they need to get the confidence to start hiring. And I don't think until they start to get that confidence that they will start to hire, and then we'll start to get some traction and some growth in the US economy. But as I mentioned, I think it'd just be a very low period of growth, and it would be very, very slow for probably the next 12 to 18 months.
Paul, thank you so much for coming in. Paul Ramscar, he's from Financial Partners, just talking to us about the state of the global economy, not suggesting there's going to be anything like a double dip in terms of an economic recession.